Hey, thank you very much. And I would say it's a beautiful day here in Boise, Idaho, except we got all these forest fires nearby, and there's a lot of smoke in the air, and it's negatively affecting my voice. So I apologize if I pause every once in a while. I'll try and mute if I have to cough or anything. Having said that, I might make this 5 minutes shorter than I might otherwise, but I'll certainly be able to answer questions at the end. First of all, I thank you for taking time out of your day to be here. I thank Trading Pub for the opportunity to make this presentation to everyone. As he mentioned, I write. I actually was first professionally published when I was 14 years old. I sold a logic puzzle to Dell Crosswords, and I consider myself a very good writer. And hopefully, by the end of the day, we might see if I'm a pretty good speaker or not. So, having said that, let's get into it. This is my presentation, Trading Weekly Options Using Math to Generate Fantastic Short-Term Trading Profits. And I actually probably should say using math and logic, because I like logic. It's fun. I'm going to have some fun for the next 45 minutes, an hour here. So I hope you guys do as well. Having said that, you can't have any fun unless your lawyer gets involved, right? And my lawyer told me to put up this disclaimer. He said, all securities used in this presentation are for educational purposes and are not to be construed as a recommendation to buy, sell, trade any of these securities. Right? If I didn't put this up, I'd have to talk about stock XYZ. Right? And we've all seen how good traders are when they deal with stock XYZ. Every option system always works on stock XYZ. We're going to talk about some real stocks here and some really big moves. Having said that, there are 10,000 stocks out there, and my system is meant to try and get you to focus on the handful of good ones, right? We start with the super large universe of stocks, and we whittle that list down, and we whittle it down, and we whittle it down, and we whittle it down. It's like starting with a giant sequoia and finishing with a toothpick, or a couple of toothpicks at least. Our first rejection is the fact if a stock doesn't have options, we're not interested, right? We consider options as a necessary evil for options traders. Right? I guess without stocks, we wouldn't have something to have an option on, right? We consider options a much better use of risk, a much better use of our time. And so if there's no options available, we don't look at it. And in reality, we tend not to look at the stocks that don't have weekly options. Now, 12 months or 12 weeks of the year, it's expiration week for every stock that has an option. This week happens to be one of those weeks. So this week for trading, there's probably more opportunities than a person can take. But the other 40 weeks of the year, we like to focus on stocks that have weekly options, right? And then we want to take that list and make it smaller still. About 4 years ago when weekly options came out, there was just a couple dozen, and now there's hundreds of stocks that have weekly options, some of them better than others. And I have created a system, right, to find the best. And my system is the Pulse system. Now, part of my writing and organizational skills is to also try and teach. And I like to use the acrostic. And an acrostic is an acronym on steroids. An acrostic spells something, right? Pulse is an acrostic. P stands for profit potential, U for upside reward, L is low risk, S is setups and strategies, E is events, entries, and exits, right? This is where the Pulse system is about. I've combined the Pulse system into a book that I've written, videos that I've filmed. I write a weekly newsletter that's published typically Saturday late afternoon, depending on what time zone you're in. In that newsletter, I have a watch list. The watch list has the stocks which I feel have the best math, right? The best math. If there's a reason to play one of those stocks, whether it's a stock-specific event stock-specific setup or an event, we tend to write a little bit more about that stock in our top 5 plus or minus, which is generally 5 stocks, some give or take. We always review the previous week's picks, and we're always trying to teach. I've been doing this, I have to think about it, 36 years now I've been in the industry, so I've been around a long time. When we actually started, our office had a Western Union telegraph line hardwired in, and we had a ticker tape machine, which was really noisy, by the way. You don't realize how noisy those are. And it's so happy to get rid of it and get our first satellite dish. And boy, what I would pay to have that old ticker tape machine today. But anyway, I've been doing this a long time, and so I've got a lot of experience, and I like to share my experience. Having said that, let's get into the pulse. And pulse, as an acrostic, is also a teaching tool and a memory tool. So let's start with P, potential profit. Now this example is from last month. This was on June 5th, right? We've got strike prices from 300 to 340. I've got the box on the left is the opening price for those options. The box on the right is the high price for those options, and you'll see that they move from 300% to 10,000% in the same day, from the open to the high, from the open to the high. Now, that's not to say that we sold it at the high, but one of the things I'll teach you is, we look to get in quite often near the open of a day. Right? So here again, the potential, if you can see a couple of these options, went from 10 cents to $895, right? 4 cents, $8.95, 10 cents to $8.95. And since an option controls 100 shares per contract, that actually went from $10 to $895 in one day. Right? The 325 call went from $4 to $505 in one day. Right? And again, I'm not telling you we're going to catch the entire move, but when we have moves this big, all we got to do is catch part of it and we can make a lot of money. So this is Amazon from about 5 weeks ago. Here was Amazon 1 week later, right? These moves aren't so good. This is only roughly 300 to 500% on a day, right? This was on a Thursday, just like today is a Thursday. So 1 week after Amazon made a big move, it made a big move. And the ironic thing, the buy and hold investors, Amazon didn't move but $2 net in this time period, but we have options that make these big, gigantic moves. So these are the moves. How much of the moves can my students capture, right? People ask me, what about your trading? What about your trading? And my answer to them is, isn't it more important, what about my students trading? Because I've been doing this for 30 some odd years. Don't you think you're more likely to replicate an existing student who's been with me for 3 weeks or 3 months, right? 3 months or 3 years than instantly be me? So I asked that question because here is a trade that a student made, right? He bought at an FCX, it's Freeport-McMoRan. And we quite often, by the way, buy Freeport-McMoRan options for 10 cents or less. This particular one he bought at 4 cents. He ended up selling it at 32 cents, and which is he sold for 9 times what he paid, so he made 800% in one day. And I asked you, is this a typical trade? And if you've been with me a while, you will have seen numerous students' emails that we copy in the newsletter, and then we dissect it to see what they did so other students might be able to do what they do. And so this particular student, he's sent me numerous FCX trades. So is it typical because he's hit it over and over again? Is it typical because we often find FCX options for under a dime? Well, you know what? They probably typically only move 6 or 7 times in price, not 8 or 9 times in price. But Here is the same student, right? Same student. He bought this Tesla call option. He bought 20 contracts at 60 cents. He sold them at $7.30. Right? This is just a one-day trade. He put in $1,200 and he pulled out $13,400 gain. And he actually bought a Toyota with his gains. He's told me that. Is this more typical? Right? And I say, is this more typical? Here's an option that's at 60 cents, right? FCX, we often find them for a dime, and we can find them for less than a dime. Typically, we might find them a little bit more expensive than that. We have been trading Tesla week after week now for a number of months. So is a Tesla trade a more typical trade? Right? So here's part of an email from a student. He says, being a student of 6 months or so, I think I'm now getting it. I've been working stiff, small business owner all my life, and have been a big follower of Investors Business Daily. Right? It gave him a nice footing for a solid retirement portfolio, but he needs to make in 1 week like he made this week following my teaching. And his email continues. He says, I'm using stockcharts.com with certain parameters to tell me when to buy and sell. He says, if you want more information, give me a call, and he leaves his phone number. You might be in the same area code as him. So I ask the question, is this typical, right? Here's a student. He's picking his own stocks. He's just using the methodologies that I've taught him, right? So some students need the newsletter to spoon feed them setups. Others are already active traders, and they want the edge of the math that's involved in the Pulse system, right? Having said that, I'm asking if these are more typical emails. Here's what I consider a more typical email. He says, great call on your update regarding Chipotle Mexican Grill and the 3X bullish banking stock. He said, so at 9:35 Eastern, I bought 10 Chipotle January week 4 $500 puts for $195, right? Since there's 100 shares per contract, that's $195 per contract. 10 contracts is $1,950. I'm going to assume he paid $15.35 in commissions. He continues, he bought 10 of the FAS Jan week 4 85 puts for 35 cents, which would be $35 a contract, 10 contracts, $350, and again, $15.35 in commission. He says, as the attached screenshot shows, I closed out both transactions for a one-day net gain of $6,538.44. Fantastic. This is a one-day gain, right? So I'm going to tell you, typically lots of our trades are one-day gains, which brings up a point from a lot of people and say, hey, what about the day trading regulations? I don't have $25,000 in my account. You know, am I subject to day trading regulations? Well, let me tell you something. The day trading regulations, you're allowed so many day trades over a certain period. These are day trades, but this does not fall outside of the regulations. Additionally, day trades are for margin accounts. The day trading rule is strictly a rule for margin accounts. If you have a cash account, you're not subject to the day trading regulations. Ironically, you cannot buy an option on margin. You have to pay cash for it. Therefore, you do not need a margin account. So you could trade 10 trades a day in a cash account and not be subject to the day trading regulations. Having said that, is this a typical trade? And my answer is yes, and I'll show you on the next slide, because I want you to realize one thing. If you look here, his time of entry, he mentioned his time of entry in his email, right? He said 9:35 a.m. The market opens at 9:30. We like to get in quite often, right? Most often, right near the open of one day or the close of a previous day. So when we get in at the open, it's our expectation that the stock is going to move a whole bunch, right? If you look closely at his screenshot, he bought 5 minutes before the open, and he sold, 5 minutes after the open, and he sold 4 minutes before the close. He basically bought it, held it the day, sold it. He made $6,000, right? $6,500 in one day. I say that that's more typical for us, right? To buy near the open, right, and sell near the close. Now, speaking of typical, right, again, what is typical? Here's an email. Wanted to let you know I traded Salesforce.com today. It was on your list today. Again, when I say the list, I'm sure he's referring to our top 5 plus or minus. He says, if my math is correct, I realized 500% on this trade. He said, this was virtually trading. See attachment and make comments. I still have to watch the 3rd DVD. So this is typical. One, because he's making money before he's learned the entire system. You'll be surprised how many people say, hey, I just signed up. What do I do? And my answer is, well, I'm going to send you a book. I'm going to send you some videos. I'm going to send you a newsletter. Maybe read the stuff first. This might also be typical, though, because he's paper trading. I try and teach my students, the fact is that you get to practice before risking money. And unlike buy and hold investing, where you're buying a stock and holding it for 2 or 3 years to see if it works, right? Or nothing against credit spreads, but that's a strategy a lot of people do. And sometimes to see a credit spread play out, you've got to wait a week or two, right? Some guys are promoting them even longer than that. My stuff, right, we know fairly quickly, so you can practice fairly quickly. And I encourage people to paper trade, or as this student uses the term, virtual trading, right? Anyway, he asked us if his math is correct, that he make 500%. And to me, that's a big point. You know, he paid 16 cents. He bought to open the Salesforce.com 53.5 put for 16 cents. He sold them later that day for 96 cents, which is exactly 6 times what he paid. So did he get 6 times his money, or did he make 500%? Right? These are legitimate, regular numbers, right? 500-600% in a day. And I say that is because my math, right, the math that we use to whittle down the big list, we don't want any stock that cannot have its options double at a minimum in one day. That's what we look to get, right? And we want big upside potential, right? We want big upside reward, but we want to do it for low risk, right? And part of the risk in trading is what you pay for an option, but part of the risk is also what it costs you to change your mind. And when I started trading options, the bid-ask spread was so wide you could drive a truck through it. You know, we'd have options that were 50 cents bid, $1 offer, right? You tell how old I am when I say offer, not ask. 50 cents bid, $1 ask. And you think about it, if you bought it for $1 and you changed your mind, you were out 50% right then and there. The nice thing with options now priced in pennies, quite often we'll look at, you know, an Apple option that might be 50 cents bid and 51 cents ask, right? You know, if you buy it and you change your mind, you're out just 1% or 2. Having said that, you know, that's a risk in trading that did not exist years ago. Weekly options did not exist years ago. I've been trading options since the 70s, right? What we have today is what I've dreamt about. The pulse system is an acrostic. PUL is the part of the acrostic that I use to determine which stocks make my watch list. I've got it all put into a spreadsheet. I'm more than happy to send you the spreadsheet. It's all white box. This is not black box. I like to think it's easy to understand, but I'm very good at math and very good at logic. Having said that, you know, I have, you know, teenagers and great-grandparents as students. You know, I will teach you how to do this, you know, and to me, it's like a game. It's like the game of Clue. We're going to try and figure out that Colonel Mustard did it in the living room with the knife. Right? That's what the Pulse setup is. The Pulse system. We try and find the right stock at the right time. And so the setups we look for, they can be stock specific, right, or market wide. Market wide, we get a non-farm payroll report generally the first Friday of each month, right? Last non-farm payroll came on a Thursday because the first Friday was 4th of July. That's a market wide event. But we also look for stock specific events. S also is for strategies. Now we can trade directionally, meaning try and profit if a stock goes up or profit if a stock goes down, or we can trade non-directionally. I'll teach you a little bit more about this in a couple slides. Take a drink of water. E stands for events, stock specific or market wide, right? And when I said stock specific setups, I should have also mentioned stock specific. You might have a technical indicator, right? So, you know, whatever indicator you use, and trust me, there's hundreds of indicators out there. I just use a handful that I've been using for a long time to get a specific setup on a stock. But we can get a stock specific event, right? A news story, right? When BP had that oil well, you know, break loose in the Gulf of Mexico, that was a stock specific setup, and that was a good time to buy British Petroleum puts because the stock went down in price. Right? Again, a market-wide event such as a Federal Open Market Committee or Federal Reserve meeting, that's a market-wide event. Now, a stock-specific event could be an earnings release, right? Earnings season is started up here just a week or so ago. We've got a number of earnings being released. We do not, right? We do not buy options prior to the earnings release. Options are overinflated. The market makers are jacking up the price to take advantage of you. We have a system to buy options after the earnings release, and there's much better math at it. If I got voice later, I'll tell you more about it. E is also for the entry, right? We can enter based on the stock being at a certain time. Again, I like to buy at the open. I like to buy near the close of one day to trade the next day. Also, I like to buy if the stock is at a specific price. Right? Our rules are very mechanical on when we get in. As far as our exits, hey, we can use a good till cancel limit order, you know, place a target order out there and let the market go to us and we get filled. Or if we have the ability to watch the market, we can let the market go up, place a stop order beneath the market, and as the market moves higher, we raise our stop, and that way we can ride the trade further. Right? The stop order will not get us out at the top, but it is possible to get us out nearer the top. The bottom line is we want to make money by buying low, selling high. Right? Make money, buy low, sell high. Now, I started my presentation saying that I'm an options trader and I have a disdain for stocks. Stocks to me are the necessary evil, right? Because without stocks, we wouldn't have options to trade. Stocks, unless you count dividends, the only way to make money on a stock is to buy low, sell high. While on options, they are multi-dimensional, right? And historically, people have bought options as a stock substitute. They say, hey, this stock's going way up. I'm going to buy a call option on it because the stock's going to go up, right? And typically, historically, people have bought in-the-money options because they get the most delta. And if And if you don't know exactly what that means, I apologize because I'm not going to get into delta in great detail in this presentation, other than to say we buy options when options are cheap, right? More so that the option's cheap than the stock is underpriced. More so that the option's underpriced than the stock is overpriced. We are looking at the options. And what we're looking for, right, and why we trade options is the fact that with options, we use very little money, which is at risk, right? I hope I don't come across as telling you options aren't risky, because guess what? Options are risky. But if you play it right, you're only risking a little bit of money. And so it's how much do you use and how much could you lose? Because if you're a small account, there's nothing out there that can make you money like what the Pulse system teaches you. And if you're a big account, you don't want to put all your big account into a play looking for some action, because that's just not good risk management. You can use a portion of your big account to trade options. You'll probably make more with that small portion than your big portion, but you keep the rest for safety. Right? So again, historically, people have used options as a leveraged directional play. They buy a call option, right, anticipating the stock is going to go up in price, because a call option gives them the right to buy a stock without an obligation, right? Right to buy for a set period of time, for a set price. The set period of time is expiration. The set period of time is expiration. The set price is called a strike price. When I started, we had strike prices every $5. Now we have strike prices every 50 cents. We can find the right option to buy on a stock. In the past, you had to know stocks really well to trade the options that were available. Now you don't need to know stocks well, you just need to know options well. Right? Most people use call options. They bet a stock is going up in price. To me, a call option is just one way to profit. The other is a put option. Right? A put option gives you the right to sell a stock without the obligation, right? The right to sell at a set period or for a set period at a set price, right? While put options can be a bet the stock is going down in price, if you own the stock, a put option can be insurance in case the stock goes down. Put options is just a piece of a puzzle. See, I like to buy calls and puts on the same stock at the same time. One way for me to do it is with a straddle. This is a call and put with the same expiration with the same strike prices. So tomorrow is expiration. Tomorrow morning, I'm going to be looking to buy straddles, right? And as a non-directional bet that the stock will move. Now, there is just a few instances when I can buy straddles. My system is very rule-based on when you can buy straddles. More than likely, I will look to buy a strangle. It is also both a call and a put on the same stock, right, with the same expiration, but with different strike prices. We have been trading Tesla strangles for weeks, if not months now, every Friday, right? I see no reason why not to do it tomorrow as well. We're buying the call and put, and we're letting the stock move. If the stock trends big one way or the other, we'll take a profit from that option, and if the stock chops around, we should get decent exit points on both of them. Right? A strangle, just like a straddle, is a non-directional bet, but it is less a bet that the stock will move and more a bet that the stock will have a breakout. Now, a couple things. I've heard 85% of options expire worthless. Anybody ever hear that? I've also heard that 85% of statistics are made up on the spot. So to me, I think the number is probably closer to 50%, because there are so many options trading, right? Half of them are calls, half of them are puts, half of them are in the money, half of them are out of the money. I want you to know we're not buying options to hold them to expiration. We're buying options to sell them at a profit. Quite often we will find an option that we can buy and sell that later might expire worthless. We're just trying to catch a small piece of the day's range, right? Now, sometimes we can get a stock to trend over a number of days, right? And some stocks we get to befriend, we get to know really well. One of these is Tesla. So back in November, I wrote in the newsletter, this is quote, word for word, no words added, no words taken away. I wrote, if Tesla, and this was based on Tesla's earnings, right? And I said, we don't trade options on stocks before the earnings, we wait until after the earnings. Our logic being, if the stock won't gap, it won't move afterwards. And if the stock will gap, there's enough new information into the marketplace that traders are going to have to adjust their positions by either buying or selling the stock, and we're going to get extra volatility. So just prior to November's Tesla's earnings, I wrote that if Tesla gaps up, right, after its earnings, I feel that the stock's going to reverse, right? And if Tesla gaps down, I felt the stock was going to continue to move down, right? To me, it didn't matter which way Tesla gapped. I wanted to buy puts, right? And then I reminded everybody, if you're not sure, you can buy a put and a call, right? It diminishes your return a little bit, but it assures you of being on the right side of the trade. So this is what I wrote in the November 2nd newsletter. Here's a November 7th testimonial. Excuse me a second, I have to take a drink of water. It says Thursday at 9:39. Again, notice that, really close to the open. That's our system, near the open. He says, I bought 5 contracts of the Tesla 143 put at 42 cents. 42 cents, by the way, is $42 a contract. 5 contracts would be $210. He said he placed an order to sell at $1.50, which is $150 a contract. 5 contracts at $1.50 is $750. He basically bought it for $210, tried to get $750. 2 minutes later, he was filled. Right? 2 minutes later, he was filled. I got this email the next day. He says, as a newer student of 3 or 4 months, I had a great week trading your system. Here are my results. Bought 1 contract, right? Just 1 contract of Tesla, the November 149 put for $1.38, which is $138. He sold it for $6, which is $600. Right? He made $462. The other student made $500 and some odd dollars. Right? Not a bad day. Here's the thing. We do not teach you to buy at the low of the day nor sell at the high of the day. Right? If you're able to buy at the low of the day and sell at the high of the day, right, you probably married a politician. Having said that, we teach a thing called sloppy slop. And the point of sloppy slop is when the moves are this big, all we got to do is get part of the move and make money. These 2 emails on Tesla were from students that were happy with how much they made. Right? Here's the 143 put, this first student. He bought it at 42 cents, sold it at $1.50 a couple minutes later. Right? The next day, it traded up over $10. His $210, right, his $42 a contract became $1,000 a contract. It went to $5,000. He left some money on the table. The Pulse system. I wrote a book, filmed some videos. I write a weekly newsletter. In that newsletter, I use the Pulse, the PUL, to find the watch list, right? To find the stocks that you should focus at, right? I look for a stock-specific or a market-wide event to take a stock off the watch list and put it on the top 5 plus or minus, right? We talk about it, you know, as I, excuse me, as I mentioned on Tesla, you know, I said, hey, I feel the stock's going to play this way or that way. Sometimes I give directional plays. I think it puts the one to buy. I think it calls the one to buy. Quite often, I'll just tell you up front, we need to buy a non-directional straddle or strangle, and the rules to buying them are in the material, right? Very, very rule-based. My goal is to teach you how to exploit a setup. So a number of years ago, I filmed a video on Slumber, right? Ticker is SLB. I jokingly call it SLOB, SLOB. Right, so I filmed a video on Slumber when Slumber had options every $5. Right, we used to include this video, and when option, now Slumber moved to where it had options every $2.50. And I write about it. And I say, hey, we trade Slumber slightly a little bit different, but I constantly talking about Slumber. Now Slumber has options every $1. So my publisher says, well, that video is kind of obsolete. We don't want to include it anymore. So I'm trying to get him to put it on the website so everybody can watch the video, because even though that video is 4 years old, it's got really good information. Right, here's June last month, a 13 times move on a Slumber option. 2 weeks later, here's a move on Slumber 10 times. And the nice thing, you'll look, if you get to know Slumber, you'll see that it often closes and opens at the same price. So this option closed one day at 7 cents, it opened the next day at 7 cents, and then it traded up to 70 cents. Right? So you could have bought it one day, right? Bought it on Thursday, sold it on Friday, not a day trade, make 10 times your money, or buy it Friday morning, sell it Friday afternoon, make 10 times your money. And if 10 times your money isn't enough on Slumber, you would have had to wait the very next week. Again, see, the previous close was 13 cents. It opened at 12 cents. It traded up to $4.36. And if you just would have waited till the close, you could have got $3.90. And you can see that this is a 2,900% change, right? 2,900% gain from one day to the next. Slumber. Raise your hand. I'm going to take a drink of water here. Raise your hand if you have ever traded Slumber. Right? Or put it this way. Raise your hand if you want to start learning to trade Slumber. Slumber, if memory serves me right, it releases its earnings tomorrow. It's probably a good stock to trade. All right, so I write a newsletter, Weekly Insight to the Options Market. I focus so much on weekly options. I want you to know that it's not only weekly options. All right. Oh, whoops, here's a testimonial on Slumber. I'm one slide ahead. Lost my place when I took a drink. Says, thanks, Chris. Got in Slumber early this morning and got out with a $1,000 profit in 15 minutes with 10 contracts. Enjoy your service very much. Too bad I'm not a day trader. Thanks again, Tack. He's not a day trader. I'm assuming he means he doesn't have $25,000 in his account, but making $1,000 in 15 minutes, he will work his way to being one if he so desires. Anyway, I'm not big on day trading, but I am very big on just going in and extracting money from the markets. But you don't have to extract it, right? Someone might say, hey, Chris, I can't look at the market every day. Well, there will be times, right? Like this. Here's a setup on Apple. I mean, Monday, Tuesday, Wednesday, and early Thursday, you had multiple entries under 50 cents, right? The low on Tuesday was 17 cents. Could you not have bought an option using a good till cancel limit order Monday, Tuesday, Wednesday night, Thursday night, put it in for 50 cents, right? And then on Friday when it got to $7, could you have not somehow used some form of exit to get out and make money? Right? Well, some of you say, well, I don't know that I can do that either, right? So occasionally I will write about long-term options. And last July, I wrote about Apple's long-term options. Now, I set up a series of rules, and I said basically I didn't care what expiration you bought. Find the option closest to $3 in premium, and that's the option to buy. So here's an example. This option on the left was 81 days to expiration, right? 81 days. That's quick mathematics, 11 and a half weeks. This option opened at 270. Hey, that's the closest option to $3. It went from 270 to 4, made $1.30. $1.30 on 270 is just under 50% in one day. Again, and see where it closed, right? It closed at 285. So you kind of knew Monday morning, based on Friday's closing price, what option to buy. The November one, was at 310 on Friday, opened at $3. It went to 412. So it was only a 33% gain in one day. But here's the thing. I didn't suggest that you buy these long-term options just for one day. I bought them because the implied volatility was excessively low, and to me, it was just a matter of time whether the stock moved or the implied volatility would go up, causing the long-term options to go up. Guess what? 3 weeks later, that option went from $3 to $25, right? So there's lots of profit opportunity, even for end-of-day traders, guys that can't watch the market when something goes from $3 to $25. Again, and I'm coming towards my close here. Actually, I got a little bit more slides. The Pulse system, I wrote a book, there's videos, write a weekly newsletter. Technically, I tell people it's not late if it comes out on Sunday morning. I've been writing this newsletter for 4 years now. In those 4 years, it's only been published on Sunday twice, and both of those were when I had an internet problem on Saturday. I got a watch list, right? We look at stocks in the watch list backwards, like, hey, this is a stock from last week's watch list, and it made a big move. Now, if we can find the same setup again, oh, hey, by the way, this other stock has that same setup. Let's move it into the top 5. We always review what we picked the previous week. I say the emperor has no clothes. I can't hide. Right? I make a pick. I gotta live up to it to the next week, and we're always trying to educate you. Now the top 5 is generally at the top. I call it the top 5, but it's the top 5 plus or minus. It's literally 5 setups plus or minus. So in February this week there were 4. BBRY. That's not Bed Bath and Beyond. That's not Best Buy. That's BlackBerry, eBay, Slumber, our buddy Slumber, and Tesoro, which is a gasoline refiner. Right. So those were my 4 picks. Right, 5 plus or minus was 4 that week. The Tesoro opened at 35 cents on Monday, went to a high of $1.32, and then it just sold off. Right. So the key to making money on Tesoro was your exit, being able to be satisfied buying at 35 cents and selling it at 70, or trailing a stop behind it. You should have gotten closer to $1. Slumber, embarrassing move from 22 cents to $1.83. I'm sorry, I was only 7 times on Slumber. More embarrassing on BlackBerry, right? 10 cents to 29 cents, it tripled. eBay, on the other hand, eBay opened at 9 cents and went to 55 cents. That's 6 times in price. Ironically, at the end of the week, it hit $2, which is over 20 times in price, over 2,000% move on eBay. Right? Have you ever traded eBay before and made 2,000%? If you haven't, you're buying the wrong options, right? The Pulse system will teach you the math to show you which option to buy, right? We can buy an option that will expire worthless after we've sold it for a great profit because it was a value when we bought it. And occasionally we'll buy an option that will just run like this eBay option, right? I've been doing this a long time. I'm not a very good speaker, albeit I think I'm doing a pretty good job considering I'm about to lose my voice. I have what I call tricks. Hey, I learned this trick a long time ago. Let me give you a tip. And when I say it, I say, oh, I got a trip for you. And it kind of became, people say, oh, I like your trips. Because my tricks combined with my tips, they become trips. And I'm going to give you a tip that you should take advantage of. The Pulse system, right? The newsletter, the videos, the books. It's $97 a quarter, right? You can quit at any point in time, or you can set up for automatic renewal. I never, ever, 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 ever discount my newsletter. It's 97 bucks a quarter. When the time comes to renew, it doesn't jump up in price. It's $97 a quarter. And you know, join or don't join. I won't notice whether you join or not. You will notice whether you join or not. But I'm going to give you a reason to consider joining now. I filmed last year for a different publisher. I filmed a video called Polarity Trading. Right? This publisher sells Polarity Trading for $149. It's a physical DVD you stick in your computer. That publisher is switching to online everything, and he will sell you this Polarity Trading download for $149. The publisher of my Pulse newsletter bought his remaining stock of Polarity Trading videos. And I thought, hey, why don't I do a webinar and I'll sell these things for $149? And he says no. He'd rather just continue selling my $97 subscription and give these things away. So if you go to this link, and Trading Pub will make this link available for you, and you know, they've probably got it written, taken from this fancy code and make it a little bit more simple, and you can click on it, or you can copy and paste it in your browser. If you join up for my system, you'll get the videos, you'll get the book, you'll get the newsletter, you'll also get this bonus DVD, Polarity Trading. Having said that, if you are already a subscriber of mine and you say, hey, I don't know anything about this Polarity Trading video and you would like it, we can just extend your subscription and I'll give you the video as well. Having said that, we are going to run out of these videos very, very soon. And we've promised Trading Pub, I think it's for through this weekend, or maybe it's just to this weekend, I'm not sure. You don't have to do it today. You can certainly do it tomorrow. And maybe you can even do it over the weekend. I'm not sure, but we've promised to keep enough videos for everybody that orders from this presentation. But these videos will go away, and I teach you how to juice your returns. If you can't imagine how much money you can make right now being my student, I will blow you away in that other video. Anyway, so I've got just a couple minutes, and I got just a little bit of voice left. So I'm gonna look at the questions here to see if there's any questions that I might be able to answer. Someone said, my commissions would eat up these cheapies. You know what? Don't complain about commissions. When I started, commissions were hundreds and hundreds of dollars, and bid-ask spreads were so wide you drive through a truck. You know, I showed you the guy that bought 10 CMG options, his commissions was 15 bucks, right? The student that bought the FCX options, he bought 40 of them, right? So the commissions can add up, but commissions are not an issue. And you know what? Commissions are a bad deal if you take a loss, right? Some of these options, when we buy an option for a nickel, a dime, quite often, a lot of times, I'll swing for the fence on that, and I don't mind paying a commission to sell something for $1 that I paid for a dime. And if you trade a lot, your broker, they are very negotiable on the commission. So let me look here. right? Here's a fact. Options have time value that decays. When you buy an option, you have to be right and right on time. Otherwise, the option will decay away. I'm going to trade a lot of options tomorrow because there's very little time left, and therefore very little time value. I get the most leverage on a Friday. Someone asked me, what's my thoughts going into tomorrow? Stocks will be up and some stocks will be down, but I doubt you can find me a handful of stocks that will doji, right? Most stocks will not close at what they open, and most stocks will not close at their highs nor close at their lows, so they're going to move. And our system, because their strike price is so close together, every 50 cents on many stocks, every dollar on some, right? A stock like Tesla, the options are $2.50 apart. A stock like Netflix, the options are $2.50 apart, but Netflix is $400 and some odd dollars. Netflix has been moving $10, $12 a day on average for the past few weeks. So there are going to be options that are $2.50 to $5 out of the money in the morning that could be $2.50 to $5 in the money in the afternoon that might expire worthless. But if we can buy them and use a target order, or if we watch to put a stop loss and a trailing stop, we can profit. Right? Now, not everybody can trade tomorrow, and that's again why I have systems for short-term or for people besides short-term traders. But frankly, once you see the results week after week, you're gonna try and work 4/10s. You're gonna try and work Monday through Thursday, 10 hours a day to get your 40 hours in, so you can have Fridays off to trade. Right? Oh, by the way, we have a full money back guarantee. And if you can't double your money 20 times in the next 20 days, I'll give you your money back, right? And I got to qualify. I said one guy said, "Oh, it's double your money 20 times." So you start with $100, and then it becomes $200, then it becomes $400, then it becomes $800, That's not what I mean, right? If you can't turn 100 into 200, and another 100 into another 200, and another 100 into 200 more, and another 100 into 200, 20 times. If you can't do that in 20 days, you get your money back, right? So, and by the way, I think I've been told I have the highest retention and renewal rate of any author writing a trading newsletter out there. Someone said, how about some real-time trade since we're near end of day? Well, we're on the opposite side of end of day. I'm going to tell you, though, that tomorrow Tesla and Netflix, will have a certain amount of volatility to them. And I probably should have had my newsletter next to me for last week so I can remember what's in it. Someone said, hey, I'm a current student. How can I get to Polarity Trading? We can just extend your membership. So if you got 1 month left, you'd have 4 months to go. We'll give you the video. If you got 1 week left, you'd have 3 months and 1 week. If you got 2.5 months left, you'd have 5.5 months. But I'll get you the video that way. Somebody at Trading Pub, you got to come rescue me because I'm losing my voice here.
Hi there, Chris.
Now someone mentioned that All right, someone asked, do I teach basic options? Yes, I teach you about options. Right? If you've never traded, I could teach you to make money. If you run a hedge fund, I can teach you how to make money. The newsletters week in and week out teach. I have students that do not need to be my student anymore because they've learned how to trade on their own. They renew because I'm constantly teaching. So, and I enjoy teaching. I don't know if it came across. I kind of joke that I'm a bad speaker because I kind of feel like I am because I've seen really good speakers, but I really know my material. And the guys here at Traders Pub, they know I know my material. That's one of the reasons they allow me to come to you guys. And I want to thank Traders Pub for allowing me this opportunity to present to each and every one of you. And I want to thank everybody for taking the time to come and watch. And thank you so much.